So you're using thousands of indicators while day trading. How is that working for you? Why don't you focus on 3 for now? The most important indicators for day trading. Let me show you which ones. Let's dive right in. Starting with the VWAP, or Volume Weighted Average Price. VWAP is a powerful tool that helps us estimate the average price a security has traded at throughout the day, weighted by volume. As you can see here on TradingView, VWAP is plotted as a line on the chart. When a price is above the VWAP, it indicates a bullish sentiment, and when it's below, it suggests a bearish sentiment. But it's not just about direction. VWAP also helps us identify key support and resistance levels. Let me show you on the chart what I mean by that. VWAP as support. Here's another chart. Traders look for the price to bounce off the VWAP line, which can signal a continuation of the upward trend. This happens because the VWAP reflects the average price weighted by volume, and many traders see this level as a fair price to buy. For example, if the price drops to the VWAP and holds, it suggests that the buyers are stepping in at what they perceive as a value area, providing support. VWAP as resistance. On the other hand, when the price is trading below the VWAP line and moves towards it, the VWAP can act as a resistance level. Traders look for the price to hit the VWAP and then potentially reverse downwards. This occurs because the VWAP represents the average price and can be seen as a point where sellers may find value in offloading their positions. If the price rallies up to the VWAP and then stalls or reverses, it indicates that the sellers are using the VWAP as a benchmark to sell, creating resistance. If I keep the VWAP indicator on while looking at a bigger time span of a stock, for example, let's say on a daily chart, you will see that it doesn't make any sense because the VWAP is a pure intraday indicator. Now let's look at our next day trading indicator, which is the volume. Volume is the lifeblood of the market. Volume represents the number of shares or contracts traded in a security during a given period. It's essential because it gives us insight into the strength or weakness of a price movement. Take a look at this chart. See those spikes in volume? They often coincide with significant price movements, signaling increased buying or selling pressure. By analyzing volume patterns, we can confirm the validity of price movements and anticipate potential reversals. Volume as confirmation. When you're using other indicators or chart patterns, for example here in conjunction with the VWAP, volume can serve as a powerful confirmation tool. For instance, if you're seeing a breakout from a key resistance level, a certain volume can validate that the breakout is likely to be sustained. Without significant volume, the breakout might be a false signal. Volume spikes. Volume spikes often indicate the entry of large players into the market, which can lead to significant price moves. These spikes can occur during news releases, earnings reports, or other major events. Recognizing these spikes can help you understand the underlying market sentiment and potential future price action. For example, if the price is rising but the volume is decreasing, it could indicate that the upward move is losing momentum, as you can see here, and a reversal might be imminent. Paying attention to such divergences can provide early warning signs of potential trend changes. Next up, we have the MACD, or Moving Average Convergence Divergence. MACD is a versatile indicator that combines two moving averages to identify changes in momentum and trend direction. Here's how it works. The MACD consists of two lines, the MACD line and the signal line and the histogram. Buy signal. A buy signal occurs when the MACD line crosses above the signal line. The crossover indicates that the short-term momentum is gaining relative to the long-term momentum, suggesting a potential upward price movement. You can see the MACD line crossing above the signal line, creating a bullish crossover. Traders often look for the signal to enter long positions, anticipating that the price will continue to rise. Sell signal. On the other hand, a sell signal occurs when the MACD line crosses below the signal line. This crossover indicates that the short-term momentum is weakening relative to the long-term momentum, suggesting a potential downward price movement. Here you can see the MACD line crossing below the signal line, creating a bearish crossover. Traders use this signal to enter short positions or exit their long positions, anticipating that the price will decline, as you can see here. Alright, let's put theory into practice with some real-time examples. Here you can see this stock is trading above VWAP, has significant volume spikes, and the MACD just crossed. This is a bullish pattern. These indicators are just tools. They are most effective when used in conjunction with other forms of analysis and risk management strategies. Are you getting any value from this content? If yes, then please subscribe and like this video and hit the notification bell to be the first to get notified once I have a new video uploaded. And let me know in the comments which of the indicators is your favorite. I put the TradingView link in the description box for you. I value your time. Thank you for watching and see you in my next video.